Welcome back to The Open, and thank you so much for being here. Sun Life Financial, of course, is one of the big players in Canada's life co-business, life insurance. It topped estimates in its most recent quarter. Strong performance in its asset management business was a factor, among other things. Let's talk about those results with Tim Deacon. He's Chief Financial Officer, CFO at Sun Life Financial. Thank you, first of all, for coming in. I appreciate it.
Morning, Paul. Thanks for having me.
I've looked at the results as best I can, and I see that the asset management business, which is a real core business at Sun Life, of course, delivered 24% profit growth in the first quarter to $351 million. Talk to us about that performance, and how might we expect asset management to perform in what was a rocky quarter for stock markets?
Sure. Well, we were very pleased with our first quarter results. In fact, we had record underlying net income for the quarter, and that was contributed across all of our geographies and business segments, asset management being a core part of that. We also had record earnings in Asia, strong growth in Canada and the US. And on the asset management side, that was really bolstered by our SLC Capital. That's our private asset business. We had record fundraising. We had a large fund closure in Asia, and we had a number of catch-up fees that we earned on the back of that. We're now over $250 billion in AUM on the private side. And then, of course, on the public asset side, we operate through MFS. And they have over $600 billion of assets under management in the U.S. That business is more exposed to the public market side, particularly on the equity.
Right.
And so it held up quite well, despite the market volatility and uncertainty. But it earns fees based on asset levels. And so far through the quarter, we've been more or less flat, but it's been up and down. And so you'd expect some sensitivity to markets going forward.
Is that what do you see softness in assets under management, AUM growth, when markets are negative in a particular quarter?
Sure. I think it's an industry-wide phenomenon, first of all, and that business particularly participates in mutual funds, active ETFs, separately managed accounts. And so in the industry, we saw outflows in the first quarter, particularly on the retail side, and that was really a flight to quality in the uncertainty in the economic environment. Many clients tend to put their money in safety and cash until wait out the volatility. So we'd expect some continued headwinds in that, but our one-year performance has been very strong in the asset management. And while we don't typically look just to one-year performance, really over the long term, that's actually helpful as those fund performances have held up, notwithstanding the volatility. Okay,
I'm seeing Asian underlying profit, or underlying profit in Asia rose by 11%. Sun Life's been in Asia for many years, correct? How do you view those markets now? Are they still viewed as higher growth markets?
Sure. We're very excited and proud of our Asia franchise. In fact, we operate across 8 different markets in Asia. And we like to think about it in 2 categories. One, our developed businesses, and the second being our scaling or developing businesses. So the development ones would be Hong Kong, Singapore, Philippines, and India, and then the scaling businesses would be more areas like China, Vietnam, Indonesia, and Malaysia. And we had record earnings in the first quarter in Asia, and that was really on the back of our strength in Hong Kong and our markets in areas like India. We expect that to continue to be a strong area of growth for us. We've been investing heavily in the region and been quite proud of the results that we've been seeing.
In the U.S., Sun Life is a big player in health insurance, health and benefits. I'm interested in what the company may believe is on the horizon if drug prices are pushed down significantly, as U.S. President Donald Trump wants to do. We've seen certainly other companies. Roche is a big one. That it's a drug maker, not an insurer, but it's in the sector. It's not delighted at this news. What might be the implications for Sun Life?
Well, I think in general, having lower drug prices, I think is good for consumers and obviously the population who need to use these drugs. As a benefits provider, that helps us because that allows us to lower premiums because it reduces the costs of providing insurance and coverage. We don't participate directly in the medical business. We have a large employee benefits business. It's top 10 in the market, and we have a medical stop loss business. So that's probably where we would see the benefits of lower drug prices more pronounced, is in our stop loss business. We'd expect to have better performance even further going forward.
Okay. Sun Life pays a dividend. What's the dividend? What's the payout ratio? And what's the company's posture on dividend growth?
Sure. We have a position of looking to pay out between 40 to 50% of our underlying net income in common shareholder dividends. In fact, this past first quarter, on the back of such strong results, we increased our dividend going forward. You know, our businesses are capital light, which means that they can generate considerable amounts of cash, and that cash allows us to look at ways in which we can optimize that deployment. And our priorities would be first to organically reinvest back into our business. We've been investing heavily in areas like digital and artificial intelligence. The second priority is the common share dividend and maintaining that dividend payout ratio, which I spoke about. And then the third would be inorganic deployments, whether that's M&A or share buybacks.
Thank you so much for coming in. We appreciate this conversation.
Pleasure. Thanks for having me.
That is Tim Deacon. He is Chief Financial Officer at Sun Life Financial.